Our next guest on Biz One-on-One, Jamal Khan of the Jamal Khan Financial Group, has a master's degree from the University of Toronto in, you guessed it, the arts. When he realized that his professional aspirations lay in business, Jamal, like many entrepreneurs, had to figure out a lot on his own. As a result of learning on the fly and his education, he's learned to take a reverse engineering philosophy to his work. He's here today to talk about his unique story, his approach to finance, and why it's been so effective. Welcome to Biz 101, Jamal.
Thank you very much, Randy. It's a pleasure to be here.
You took an arts degree. I guess you didn't plan on being a financial guru.
No, not at all. 15 years ago, I had no intention of being in the financial services industry. I wanted to be an academic professor at a university.
Oh, really?
Yeah, like a lot of young people, I wanted to make a big social impact in the world. And at that time, I thought to myself, what better way of doing that than being a professor and teaching new young people and students, what at the time was my left-wing views of the world, and empower them to make social changes. So I was on that track. I went to the University of Toronto, completed a master's degree, and during that time, I decided it wasn't for me, and I came back to Vancouver in January of 2008, and I really wanted to get into business and entrepreneurship. Personally, growing up, I come from a very entrepreneurial household. My dad, as when I was a young child, he had an import-export business in Asia. And a lot of my youth was helping him, moving boxes, doing some inventory on the weekends. So not your typical childhood.
That's why you wanted to be a professor.
That's why I wanted to be a professor. Yeah, that's right. So when I got back to Vancouver, because I didn't have the formal training, I wanted to go to UBC and do an MBA. And lo and behold, an individual that I had known for a little while had said to me, "Why don't you have a cup of coffee with a local financial advisor? He's pretty successful." And I'm a very open-minded person, so I decided, sure, I'll go meet this individual for a cup of coffee. And basically this person told me a little bit about the industry and did a pretty good job of hooking me and recruiting me, and I started with that person for about a year. And that was 10 years ago, basically, this August.
Interesting time to get into the financial planning business, 2008.
Yeah, so I basically started 7 months before a huge crash, and it was definitely challenging, but I learned a lot. I learned a lot about human fear and greed and how those elements of human nature come out in the financial markets. And I got some really good training. I did well, and I survived at probably the worst time to enter the business. So that gave me confidence, knowing that as things in the general economy improved and things would do better, that I'd probably have a bright future ahead of me. And I did survive through that period. It wasn't easy, but I did make it, and things did with the economy rebound after that.
So you never went and got any business degree or training?
No, I came from the School of Hard Knocks, learned from my dad, learned a lot from just doing it in my first year, meeting people, trying to understand how to connect with people, build those relationships, and really add value to clients and strategic partners that I worked with. And being trying to be a student, continuously learning and learning as much of the industry as possible, and trying to get that high level technical expertise that's important, and just always trying to grow and improve and evolve. And those were the principles I used, and it ended up working out for me.
And you very quickly found yourself training other financial advisors.
Yeah, so after about 13 months, I decided to move to a more corporate environment, more structured environment, and an opportunity presented itself with Sun Life Financial. And I did well there, and I was quickly offered a management position. At the time, I was the youngest sales manager in British Columbia. And my role basically moved from, bringing on clients, helping them with, their own financial planning, to bringing on new financial advisors that are looking at the financial services industry as a career path. So my responsibilities were bringing in new people, training them, taking them out to the field to actually show them how financial planning works, with real life examples, and building them up to the point where they had the tools and skills necessary to go out there, be self-sufficient, and build a successful business. So it was a different type of role, but it was very gratifying, very fulfilling. Made a lot of great relationships with individuals who I'm still in contact with. It had its challenges, that's for sure, but yeah, it was a great experience.
So I've got a pet peeve about the financial planning industry, and you're a fairly young guy. So there you were, especially when you first got started, or even in recruiting some of these financial advisors. A lot of times these people are in their 20s and they don't have any life experience, and they're sitting down with me advising me how to manage my finances.
Yeah, you raise a great point. There are some definite challenges for a new person that is entering the financial services industry. A lot of the individuals that are first getting into the industry, they're straight out of university. They sometimes are younger than 24, 25 years of age, and they don't have a lot of those practical life experiences. And there's different paths that they can take if they know long-term they do want to be a financial planner or a financial advisor. In some cases and in some instances, people might start at a bank and start to get some experience there. They might be an associate junior advisor under, an advisor who's been around for 10, 15, 20 years, and start to help that individual with basic things like paperwork and confirming client meetings, and that they'll get some exposure that way. If an individual is wanting to get straight into the business at 24, 25, I let them know several times, and they should be aware that they will have an uphill battle because there can be a credibility gap. Who they can actually work with at that point in their careers, other young professionals who are also starting off in whatever industries or sectors that they may be in. The top financial advisors or planners may not have an interest in working with too many young professionals that are just starting out, and maybe they don't have the assets necessary. And that is a part of the market that does need to be serviced by somebody. And if there's another, young professional as an advisor, he really has an opportunity to grow with that demographic of other young professionals that will be growing in their career over the next 10 to 15 years, really creating a win-win, mutually beneficial relationship. There might not be a lot of assets there immediately, but they'll grow over time, and those relationships over time will become quite strong and forged. And that's the reality of it out there.
Yeah, I never thought of that before, but it's true. My son, who's in his late 20s, has a financial advisor, and it's probably a younger guy like him.
That's right.
So you've moved into a part of the business now that's working with some higher net worth people, and you've formed your own company. Tell me about how that came about.
Yeah, absolutely. So in 2013, I was running a branch in Metro Vancouver. I had a team of about 7 sales managers and 140 financial security advisors that I had built up. And we were doing mostly mid-level financial planning for income earners, $50,000 to $150,000 of income. And I started to see what was happening with technology and innovation, robo-advising, where technology, I think, would play a bigger role over time, helping that part of the market. And I began to shift away more to the high net worth market. Individuals who I like to say have good money problems. For me, I see my value as being somebody who can provide a solution to a problem. And if somebody has a good money problem and I can create a solution, I'm creating some value, and that is scalable and sustainable. So I saw an opportunity there. And in 2015, late 2015, early 2016, I started to build that platform out. So I started to go out into the market and start to recruit some key individuals, including lawyers, CPAs, private bankers, financial advisors who focused on corporate solutions. And we focused on 4 specific areas: high net worth investors that have a good money problem when they pass away of having to pay too much tax to their estate. Businesses, privately held businesses that are either growing their revenues very quickly with multiple shareholders or key people in that business. Businesses that are more mature, that have idle capital and cash that they're not, for whatever reason, reinvesting back into their company. And individuals that are looking to park their assets in a tax-efficient asset class. Those were the main areas. And through those areas and the collaborative tax and estate planning work that we've done with other professionals like lawyers and CPAs, we've been able to create value that is very quantifiable for our clients. And we've grown a lot that way organically, and we've created some great relationships. And for us now, at this stage, it's all about scalability and getting that message out to other individuals that believe they can benefit from our services and our planning that we do.
Yeah, so I mean, it's financial planning, but it's a much different game looking after, like you say, you know, the $50,000 to $150,000 earner that's basically trying to save for their retirement effectively and manage their tax situation. But when people become successful, and a lot of it is entrepreneurship. Like, so in Vancouver, for example, which is a tech community, are you working with some of the ultra high net worth tech companies and those entrepreneurs?
Yeah, you make a great point there. You know, whether you're in the mid-market or you're ultra high net worth, you're going to have some challenges. Many of the challenges in the family market are more relationship based. They need a coach. They need someone there to make sure that they keep the habits, the financial habits in place. Going back to the high net worth, you know, their money problems are good money problems. So we have began to you know, develop some relationships in the tech sector to answer your question. Those relationships are not as mature as some of the other industries that we work with. We work with manufacturing, that's a big one for us. We work with people in trade, importers and exporters. We work with a lot of professionals. So there's a couple of private equity investors that we've had the good fortune to work with and help with some tax and estate planning work. And in terms of tech, the reason that relationships there have not been forged as much is, as you know, in the tech sector, a lot of the any of the earnings at the end of the quarter, at the end of the year, are reinvested usually back into the company. So we've done a little bit of planning for you know, individuals in the tech sector that might have multiple shareholders that need a buy-sell agreement set up. But not too many of the tech companies that we're aware of in Vancouver have a lot of retained earnings, so they're not going to be paying a lot of money in passive tax rates. And it's the nature of that industry and of tech for you know, a lot of founders to reinvest all their capital right back into the business. So we come in place more when the business is you know, is more mature and doesn't have that, is not reinvesting everything back in the top line growth.
So the company is, your name is on it, but there's several people that are working with you, from experts from different sectors. How do you position yourself as a brand, Jamal Khan, you know, financial group, compared to, for example, Sun Life? Like, why would particularly ultra high net worth, or maybe a family business that has a lot of assets and maybe a lot of free cash, why would they come to you as opposed to a brand that they would recognize?
Yeah, if that's a great question. I think there's a few different reasons. The financial services industry, unfortunately, is embedded with many different conflicts of interest. And I think more and more over the last 18 months, you know, people have become more aware of that with some of the stories that have come out in the United States with Wells Fargo, and even, you know, last spring with TD Bank, where there was some stuff going on that shouldn't have been happening. So there are conflicts in the industry, and a company like Sun Life is, you know, obviously a great company. Our value proposition is, we believe that no one financial services institution, whether it's a bank, a credit union, or life insurance, has a monopoly on the right products or services that fit at the appropriate times for a client. Our view is that you know, each company in the marketplace has their individual strengths, and for us, it's important to have, you know, the right tools in the toolbox for a client. And to really do that, you need a broad array of products and services available for yourself. And our value proposition is, we have strategic relationships with over 100 different financial services institutions, including Sun Life Financial. So we're not bound to any one product or service, which allows us to be more competitive in the marketplace and to make sure what we're doing is adding value in the largest way to the consumer. Also, I would say we tend to view our work a bit different than most financial planners. So we do a lot around financial literacy, financial education, and collaboration. Going back to the ideas of conflict of interest, we don't do anything unless we meet with a client's CPA or legal teams and they understand our proposals and how this fits into their larger tax and estate plan. Because it's important for us that the right due diligence is done to mitigate any of those conflicts of interest and to make sure value is created. So I think collaboration is something that sets us apart. I think having strategic relationships with over 100 different financial services institutions sets us apart. And I think our drive to increase financial literacy and financial education, and for individuals to really understand on a deeper level, why we recommend what we do is important. And that we give back to the community in terms of financial literacy in a number of different ways. I think that's what gives us a competitive advantage in the marketplace.
So you're a financial advisor as opposed to, I guess to be blunt about it, is some financial advisors are basically just representing a company that's selling a financial product.
Yeah, that's a great point. Too much of the industry is based on an old, outdated sales transactional paradigm. Many companies, and what creates these conflicts of interest is companies act as both a manufacturer of products and services and a distributor. And that means that those advisors, their distribution force, regardless of the client's circumstances or good money problems or challenges, only really have one solution, and that solution may not be in the best interest of the consumer. Being an insider at different companies, I saw firsthand how that worked in terms of sales quotas and conventions where people would get free trips around the world if they sold X amount of product in a year. And I think that ultimately does a disservice to the consumer and to the industry. And I think that that type of a sales paradigm ends up ruining what could be great long-term relationships with a lot of individuals. Clients, I think, are intelligent, they're smart, and they understand if what they're being offered is something that fits into their overall financial plan, or if they're being pitched a product for the sake of a product. Mutual funds are a great example of this. They're notoriously expensive, and they actually underperform 90% of the time the broader market. So it really doesn't make sense, right? It doesn't make sense to pay more for something which is an inferior product in the marketplace. You wouldn't pay more for a used car than you could for the actual new car off the lot, right? Too often that's what happens in our industry.
In the intro, I mentioned reverse engineering. What do you mean by that?
Yeah, no, that's a great question. Reverse engineering for me, as a business owner, or if I'm helping a client, is figuring out what your end goal in mind is first. So having a vision, let's say a 5-year vision of where you want to be, where you want your business to be, what you want your life to look like. Being very clear and getting as many details down as possible.
Of what it's going to look like?
Yeah, of what it's going to look like. So if you have a 5-year vision for your business, writing down pen to paper, how many employees do I want to have? How many clients do I want to have? How much revenue do I want to have? How many earnings? What cities do I want to be working on? Giving you a roadmap or a destination of where you want to be. And then reverse engineering that process simply means chunking that down into chunks. So a 5-year plan, a 4-year plan, a 3-year plan. You chunk it all the way down to daily steps that you can take. And I like to use the acronym of a SMART goal: specific, measurable, attainable, realistic, and time sensitive. And you'll find out by using that formula if your 5-year vision actually is doable or not, if it's attainable or if it's not attainable. Most people, when we're dealing with clients or we're dealing with other professionals, because we deal with a lot of different professionals in the type of work that we do, they have no clear vision usually of where they want to go or how they're going to get there. So the work that they're doing today or on a weekly basis or on a monthly basis, they don't actually know if it's productive or not, because they don't know if it's leading them closer to their destination or if they're spinning their wheels or if they're moving in a counterproductive way. So reverse engineering simply means start off with what your vision or what your goal is and work backwards to see what you have to do to achieve it.
Big buzzword today is artificial. Well, it's not a buzzword, it's reality. Artificial intelligence is starting to permeate all aspects of our lives. And you're working on a project within your own business that sounds interesting.
Yeah, I am. Part of our challenge is to get quality financial advice to as many Canadians as possible. Not enough Canadians are getting the financial help that they need. We touched on these points a little bit. The larger advisors may not want to work with those individuals, and some of the banks have created, systems that have really pushed some of the, individuals that are starting off in their career to the sidelines. So we want to, we're working on something that will give, general financial advice across for anyone who wants it, and we want to tap into technology. Everybody today has a smartphone and they have all the knowledge available right at their fingertips. So we see a great place where we can add some value for individuals that are looking for general financial planning advice. So we're working at the early stages with a few developers right now on some financial planning software that any individual could use, where they basically put in, their age, what their long-term goals are over the next 5 years, income levels, and that financial planning software will start to give them some preliminary areas that they should begin to think about in terms of a financial plan. This is also important for us because, as I mentioned earlier, there are different conflicts of interest within the financial services industry, and whenever you're dealing with, another individual, you always have to consider and think about what's in it for them at the end of the day. What are they getting out of this relationship? A financial planning tool that's based on an artificial intelligence really removes those conflicts of interest and the challenges that all human beings have, and gets an individual more empowered. So when they're ready to actually sit down with a financial advisor, they already have somewhat of a template or a thought process of the questions to ask that financial advisor. So they're in a better, more equipped position. And it also allows them to know which financial advisors have the basic skills necessary, so they can actually interview maybe a few different ones from the knowledge that they get through the software that we're trying to develop. So, and that would be a free service that we're wanting to provide to individuals. Yeah.
Well, Jamal, congratulations on a pretty skyrocketing type of career. You just started in 2008 and you're already running your own quite substantial firm that's on the rise, and really great to hear your story and to learn a little bit more about your industry here on Biz 101. Thanks for joining us.
Thank you so much. It's been a pleasure.
You bet.